friends, welcome back to Amazon World. So in today's video I'll be explaining certain questions where you guys might have some doubts. I will be not explaining the entire questions, rather I will be only explaining the specific points which we should consider while we're doing the questions. Some of you might have doubts regarding some of the questions from this chapter, that is preparation of financial statements of non-profit organizations. So here I am to explain the points. In the illustration number 3, the very first question where you would have doubt will be illustration 3. That is, here you might see in the closing balance you will be able to see 200 and 140. Okay, so you want to know how did this amounts came, right? Here just read the sentence, that is subscription for 2012 unpaid at 1st January 2013 400. Okay, so outstanding for the in the beginning year was 400 and 200 of it was received in 2013. Now that is this 400 is the amount which was outstanding in the last year and it was carried forward to this year, and they said us that this 200 of this amount was received in 2013. So what we have to do is we have to subtract this 200 from this 400 and we'll get 200, right? So this is the 200 which we wrote here. 400 is the amount to be paid, but we only received 200 of it in the 2013, and now we have 200 balance. So the balance amount was written down in the balance. I hope you guys understood it. So this is how we got 200. Okay, now the next question, that is illustration 4, there is a mistake. It is actually not 500, it should be 1000. There is mistake in illustration 4. It should not be 500 here, instead it should be 1000. It should be 1000 here, not 500. This is just like how we did the illustration number 3, that is in subscription in arrears, that is the beginning year we had 1500 as outstanding. Beginning of the year we had outstanding of 1500, right? And also amount of subscription received during 2012-13, that is this current year, 40,000, which includes 500 for the year 2011 and 12. Here see, they have told us that they had paid us 500, which was for the year 2011 and 12. So this is belongs to 2011 and 12, right? There is an amount rupees 500 which was paid for the year 2011-12, right? So see here, this is the period 11-12, right? And the current period is 12-13. So in the 11-12 they had 1500 as outstanding, right? And they gave us 500. So what is their balance? What is the balance amount now? That is 1500 minus 500. They gave us 500. Now the balance is 1000, and this 1000 should be the one that should come here as balance, not 500. So I want all of you to correct this mistake. So that is the mistake in this question. And next question is an easy one. I guess you guys can do it. And if you guys have any doubts regarding this question, you can just comment me in the box. So I will make a video for that question. So that's it. We are going to the next question. Now we are going on to illustration 7. This is the illustration where most of you had a lot of doubts. So let's clear that. First, the very first doubt you might had will be this one, that is cash spent more. They had given us cash spent more as 1000, and you guys might be thinking that what is this amount is. So they had already told us in the adjustment that cash overspent. Cash overspent means they meant cash spent more. So they just changed the term so that we will get confused while reading it. So cash overspent and cash spent more means one and the same. So cash overspent represents honorarium to secretary not withdrawn due to cash deficit. His annual honorarium is 12,000. Okay. They are saying that they have given us cash spent more as 1000, right? Okay. They have given us cash spent more as 1000. And in the adjustment, they have told us that cash overspent represents honorarium to secretary not withdrawn due to cash deficit. So you can see that this is actually a receipts and payment account. This is actually a receipt and payment account, and they had a deficit of 14,520, right? So they are saying that the amount which was termed as cash spent more 1000 is actually amount which they couldn't withdraw because of the deficit they had that year. That year they had a deficit of 14,520, and because of this deficit they couldn't withdraw the amount which should be gave to due to a deficit of 14,520. This club couldn't give honorarium to the secretary. They said as that the annual honorarium of the secretary is 12,000, right? So annual honorarium is 12,000. Annual honorarium is equal to 12,000, right? So annual honorarium 12,000 means for 12 months. So honorarium for 1 month is 12,000 divided by 12, that is 1,000. Okay, so in each month this club have to give the secretary honorarium of rupees 1,000, and they couldn't give rupees 1,000 because of the deficit 14,520, and that is what they are saying here. Okay, so actually this cash spent more 1,000 is the amount which they couldn't pay. So what we should do is we will be able to see in the receipts and payments account that they had only returned this honorarium to secretary 11,000. Why? Because receipts and payment account follow cash basis. Cash basis means they will only record those items which they really received or which they really pay. Okay, so honorarium to secretary. The secretary we only paid secretary 11,000. That is 1,000 balance to be paid to the secretary, and that is what they are telling us. Okay, so since receipts and payments account follows a cash basis, they only wrote 11,000 here. So in receipts and payments account, since they are following cash basis, that means in receipts and payments account, what we'll do is that secretary honorarium to secretary is not returned 12,000. Instead, they just subtract this amount 1,000 from this. Why? We didn't pay this amount to secretary, so that's why in receipts and payment account, since they are following the cash basis, they only return 11,000 in the payment side. So that is one of the point. And the next point is the same honorarium to secretary in income and expenditure account. What we have to do is that honorarium to secretary which we paid was 11,000 actually, but we also had outstanding of rupees 1,000 which we should pay to the secretary, and together it will become 12,000, and this is the amount which we'll write in the income and expenditure account. You can see how they are written here. Okay, so that is what the adjustment of honorarium to secretary and this cash overspend made. And the next thing is, you guys might get confused, is the depreciation rates. Here you can see that the cost of the premises is in the beginning of the year was 36,517, right? So that is cost of car. For premises it was 87,000 in the beginning of the year. At the ending it changed into 1,17,000. Cost of premises changed to 1,17,000 from 87,000. So let's see what they have did with this premises. Here you will be able to see premises 30,000, right? So since this is receipts and payments account, so what they mean is 30,000 rupees is there. Maybe they would have bought a new premises which is of rupees 30,000, and together it became 1,17,000. So this is what they meant by this. So they purchased premises which was of rupees 30,000, and together it became 1,17,000. Now, so accumulated depreciation. This accumulated depreciation shall be subtracted from the cost of the premises which was there in the beginning year. Accumulated depreciation was of rupees 56,400. So what we shall do is that in the beginning year it was 87,000, right? So we have to subtract this 56,400 from this 87,000, and what we'll get is 30,600. Now the cost of the premises is 30,600. Okay, and then what happened was that we purchased a new premise. Which was of rupees 30,000, which is of rupees 30,000. Now add this together, 30,600 plus 30,000, you will get 16,600, right? And now we have to calculate 5% depreciation on this amount, and then we'll get the amount which should be written in the income and expenditure account. So that is what they meant here. You can see in the income and expenditure account they have written 16,600. This 60,600, how did we get it? That is, they have already told the beginning year. In the beginning year they had 87,000. They had a premises which was of cost 87,000, and they also bought a new premise which cost 30,000. The accumulated depreciation was 56,400. So we have to subtract this accumulated depreciation from this 87,000, and we'll get the WDV of the premise. Okay, so this is the real cost of the premise right now. In the current year, this premise cost 30,600. Now we have to add this 30,600 with the newly purchased premise, which is of course 30,000, and together we will get 60,600, and we have to multiply 5% of depreciation on it, and that's the amount which we will write in the income and expenditure account. You can see it here. Okay, so that is how we calculate cost of premises. And the next thing we have to calculate is cost of car. That is another thing which you guys get confused. Okay, let's see. So they have told us the cost of car at cost is 36,570, right? So beginning of the year the car cost 36,570, and it had an accumulated depreciation of 30,817, which they have already given us in the question. You can see 30,870. That is the accumulated depreciation of the car till the date. And now we have to subtract this accumulated depreciation from the cost of the car, just like how we did in the cost of premises, and then we'll get an amount of 5,000, that is 36,517. We have to subtract this accumulated depreciation from this amount, and we'll get 5,700 as a WDV of this car. Now the car cost 5,700. What they did was that they actually sold this car which cost 5,700 for the amount 9,000. So we had a profit. We had a profit on sale of old car. You can say old car. That is of we'll get a profit of 3,300, because the real cost, the WDV of the car was 5,700, and we sold it for 9,000. So we got profit, and this is the amount. And this is the amount which they have entered in the income and expenditure account. You will be able to see that amount here, 3,300. So how did we got this 3,300? The cost of the car in the beginning of the year was 36,570, and the accumulated depreciation of that car was 30,870. We subtracted this accumulated depreciation from the cost of the car which was there in the beginning of the year, and we got the WDV, or we can say the real cost in the current year. That car cost 5,700, and what we did was that we sold this car which is of course 5,700 for 9,000. So we had a profit there, right? So 9,000 minus 5,700, we'll get an amount 3,300. So that profit should be entered in the income and expenditure account. Okay, we have to enter this amount in the income and expenditure account. So that is over now. Now we have to come up with an amount which we should calculate depreciation on it. So next we are going to calculate the amount for depreciation. We sold the car which cost 5,700 for the amount 9,000, and we bought a new car which is of course 37,800, and this 9,000 is not included in this 37,800. That's what they are saying here. So 9,000 is the proceeds which we got by selling the car, right? By selling the car, which is of course 5,700. So we have to add this 9,000 plus this 37,800 to get an amount. That is 9,000 is the sales proceed. This plus the new car which we bought, that is 37,800. We'll get an amount of 46,800, and we have to calculate depreciation on this amount. The depreciation for car is 20%, and we have to calculate this 20% on this amount, and that is how we get this amount in the income and expenditure. You will be able to see this 46,800 here, right? So that is how this amount came. So this is how we calculate depreciation for the car and the premises. And the other thing is that there is an honorarium, right? There was an honorarium here. The honorarium of this 1,000, that is, this 1,000 is something which we never gave. This honorarium is the amount which the club should give to its secretary, but they hadn't gave them. So we have to show this amount in the liability side of the balance sheet. It is an outstanding item, so we have to write it in the liability side of the balance sheet. So that is how we do illustration 7. The other adjustments are very easy, you will be able to do it. So these are some points which you get confused while doing this illustration. Next we are going on to illustration 8. In illustration 8, you guys get confused. See, how did they calculate the amount of depreciation? It is actually easy. They have told us that there is depreciation for books, building and furniture, right? So first of all, just look, we can go on looking books, that is library books. So library books cost 2,30,000, and books added during the year 52,200, right? So, and during the year they bought new books, which is of course 52,200. So what we'll do is that we'll just add this amount together and we'll just apply the rate of depreciation on it directly. But that is not what they did here. That is, they have not mentioned as the date, the exact date when they bought these books, right? They just say that during the year. They have only said us that they bought these books during the year, but they have not stated in which date they have bought it. So we are assuming that this amount, the additional books which we bought during the year, we bought it in the middle of the year. So what we have to do is, while we are calculating depreciation, we'll just, depreciation is calculated like this: 2,30,000, right? 2,30,000 into amount of, the rate of depreciation is 15%. They have said rate of depreciation is 15% is the rate of depreciation. So we get an amount that is 34,500. Now 52,200 into 50% into 6 by 12. Why did we took 6 by 12 here? We are assuming that we have to write it as note just before writing the answers. That is note, assuming that books which was bought during the year was actually bought in the middle of the year. So there is no such note regarding this thing in our textbook. So that is where we all get confused, right? So since they have not mentioned the exact date when did they buy this book during the year, we are just assuming that they bought this book during the year, in the middle of the year. Okay, we bought this book in the middle of that year. So that's why we are multiplying the 6 by 12, and I guess you get why did we multiply it with 6 by 12 now. Now we can see 52,200 into 50% into 6 by 12. You will get an amount of 3,150, and together we'll get 38,450, and this is the amount which they wrote in the balance sheet. You can see 38,450, 38,450, and this is how we get this amount. So this is the exact way how we do the furniture also. I have already said this addition to furniture. This addition, we are assuming that this furniture was bought during the year, and since they have not mentioned us the date, exact date, what we do is that we multiply this 35,500 into rate of depreciation is 10% into, that is 35,500 into 10% into 6 by 12. That is amount of furniture is 1,59,000. Addition of furniture is 35,500. Depreciation is of the rate 10%. What we do is that 1,59,500 into 10% and 35,500 into 10% into 6 by 12. How did we go to 6 by 12? We assume that this furniture was bought in the middle of the year, and that is why we are multiplying this amounts with 6 by 12. Okay, then we'll get the exact amount, that is for 15,950, and we'll get an amount 1775. You have to just add this together, 15950. You will get this as the amount, and you will be able to see this exact amount written here in the depreciation as depreciation, right? So this is how we get this amount. So it is pretty easy actually. We'll be explaining the points of doubts of the next questions in the next video. So thank you for watching.